Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody. Welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing day yesterday, as we are about to do what we do each and every day, looking at futures markets from an educational perspective. The S&P this morning, we're up about 7 points. The Nasdaq is up about 27, as we are seeing a bit of a rally here early today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you are a returning channel viewer, do me a favor, hit that like button, smash the little thumbs up. Doesn't take you but a second. Just do it real quick. Thank you for that. Appreciate it. Okay, let's go ahead and dive right in. S&P this morning, we're up 7 points. We actually had a really nice breakout opportunity. This is the level we spoke about yesterday in the DMC, and now we've got a fairly decent trend on the upward side on the hourly chart. I will say we are still, however, between our 4-hour levels of demand and supply, and so a little bit more cautious in taking any 15-minute levels, only because we're still in between those bigger picture, areas. But on the 1 hour, I feel like we've got a pretty nice move up. Now, the momentum of this move up is slowing just a bit. And with the slowing of this momentum, we may get a bit of a rollover. If we get a rollover, there's an opportunity for price if it comes down into this area here for a potential long. But we still have our short set up here above 3,000, this 30.3, 30.9 area for a potential reversal if price does indeed make it up into there and we have no basing in front of the level. I think that level is still pretty valid. We are sitting at, what eventually could be another potential breakout if we base in front of this level here, as we already hit it twice. So just keep an eye on it. Be a little patient today. We are seeing an area that could be a reversal right now, and if you really wanted to try, you could go candle to candle off the hourly chart from this point. Next, let's take a look at the Nasdaq. And what we can see here in the Nasdaq is that we had the rally up off of this level. Now, this one didn't have true basing in front of the level, which makes it a little bit less likely for an entry. We did get a bit of a pullback, but notice, however, in front of this 15-minute level, we had a bit of basing. And the basing in front of this 15-minute level is hourly basing. So that will invalidate that level, right? Because if we think about it, here's my risk in the trade, which has to be somewhere up here above that pivot. And then if I duplicate this and move it down, that basing really only left me with a 1-to-1 reward to risk. And this is why, as much as people like to talk about set it and forget it style trades, I am not a big proponent of set it and forget it, because basing in front of a level will turn a level to dust. It will make a level useless. And notice price just barely came up above where our stop loss would have to be in this instance before then reversing back down. And this is why it's important to always recognize that if there's basing before a level, then the level is going to not be as valid. Now, oftentimes that basing before a level will just cause price to thrust through it a little bit, and we can see a move back in our original direction. And if that's the case, we got to be okay with that, and then just follow our rules and stay away when there's basing in front of the level. Now, if I look at, I'm just going to throw a quick momentum indicator on here because I talked about the fact that our momentum was slowing. You can see that my momentum pulled back just a little bit. If we get another move up, and let's say we have the same swing highs, we'll have lower swing highs in momentum. And so that's where I talked about that momentum is kind of slowing. So just be aware of that. This upward trend, though it's not over on the hourly chart, and we're sitting right at this trend line, this could be a good candle-to-candle opportunity here, but just keep that stop nice and tight. Don't allow yourself to get caught up in the in the hype of, okay, well, we're going to start rocketing back up, because that's not necessarily the case, because we're still in between our areas of demand and supply. This is a little bit of a demand area, though, that we are kind of bouncing off of. And so that's where I was saying this candle-to-candle opportunity exists. Okay. Next, looking at crude oil. So crude oil yesterday really came down hard. Unfortunately, I didn't have a potential short setup for the entry aside from a breakdown. If you were able to catch a breakdown, looking at kind of what we have now, and let me go to my 60-minute, not my 15-minute. Looking at my hourly chart, we still have this level here in play. This is the one I spoke about yesterday. That level is still very valid. I'm going to leave that one in place. On a smaller time frame, there's some noise that was happening in here that I think could have some validity as well. With our defined trend, I'm actually a little bit less hesitant using a 15-minute level in crude oil, only because of the more defined downward trend. So here's an opportunity in here. Keep your stop above this area here, but we got to make sure there's no basing in front of the level. And then gold. So gold yesterday, we talked about this potential confirmation long. We got a little move away off that confirmation long. However, it just didn't do it for very long. So one of the things in our trade updates we posted was take your money off the table, move your stop if need be. This trade feed, GC's triggered entry, but is basing very close to entry. Currently, a small profit in the trade, but stalling. So that was kind of the talk there was to close that position in case it was going to go against you. So that level's obviously dead, as that's exactly what happened. But hopefully you're able to catch that. Now the level below, which was a 1 hour entry level, we have set as a confirmation entry. Unfortunately, it's moving like a limit entry, so I didn't get any fill off of this, as it is moving the way we would want it to move. However, if we do get enough of a bounce off of that, I've got a really nice wick over wick level right here on the hourly chart where we could see a decent reversal. So keep that area in mind today. Sliding over to our bonds and currency markets. Our bonds and currency markets, we are still in between our 10-year note major levels that we spoke about yesterday. Did put in a little bit of a potential reversal here in the overnight. So keep an eye on this area here as we had a big sell-off at the European market open right through there. So keep an eye on that zone for today. The Aussie. This is frustrating. This is definitely a news announcement that caused this big price shock right up to wipe out any potential stops on a breakout. And so our breakout setup was actually pretty clean, and then we had a news announcement. So do me a favor, leave me in the comment section down below our rules on trading breakouts at news announcements. I think that would be important for everybody to see. So leave a comment down below. What's our rule on trading breakouts around news announcements? And so now what I look for are, what are some of my next opportunities? Well, with this long upper wick, this wipes out most of these areas here that I would use going forward. I still think our better moves are for price to continue to fall. And so now what I would do is let's take a look at this distance of this parabolic move down. Let's just take the whole thing. And let's look at about 50%. So at about the 50% retracement area of this, so right about here is going to be an area where if price rallies back up into that region, lo and behold, that 50% retracement is about an area that was an old support line. Start looking for a candle-to-candle opportunity at that area. Oftentimes, that 50% retracement of a parabolic move is a good usage of for an entry. In the euro, so the euro, we've continued our move down. If I go to the 4-hour chart, we've got our strong 4-hour downward trend. We're looking for an opportunity to rejoin that bigger picture trend. And on the 1-hour chart, I think my best area to rejoin that trend is probably going to be, I've got two decent levels right here. I like the structure of this one up here. However, it may not make it there because of all of this noise to the left here, which causes this to be a better level. So what I would say, I'm going to do it like this. I'm going to put both of these levels on here. follow your trade plan. You might even use this lower level as a confirmation entry, but both of which I think are pretty decent little levels. Canadian dollar. Canadian dollar is still between our levels of demand and supply. You can see that in the Canadian dollar, we've essentially done nothing in this new contract. No sense in forcing a trade inside the Canadian dollar. Great British Pound, Japanese Yen. Today is the first day of October, so we're down to our final month before Brexit. So be aware of that. And there's not a whole lot for me to look at here inside of the pound, as it's still in between and still chopping sideways. The Japanese yen, yesterday we talked about the short entry here, so hopefully you were able to catch that short entry. We had talked about taking your stop and moving it down to this region here to lock in some profit. And so if you did that, great, and you're still riding it down, I would at this point take your stop and move it to about here so that you have locked in a little bit more profit and just allow that thing to continue to run as price moves. So with that being said, everybody, I hope you guys have an absolutely amazing day. If you got any questions, please send us an email, support@tradersarmy.com. Until tomorrow, I will talk to you soon. See you later.